Hi, and welcome to the Spring 2012 Burkenroad Report presentation on Houston Wire and Cable Company. I'm Nelson Mead, one of the analysts. The other members of the team are Jack Dale, TJ Henry, Tucker Thorpe, Tyler Robinson, and William Kazin. A few quick facts about Houston Wire and Cable Company. The company operates out of Houston, Texas, where it distributes specialty wire and cable products to the industrial, infrastructure, and utility markets in the United States. The company is traded on the NASDAQ under the ticker symbol HWCC. Houston Wire and Cable operates in the industrial distribution market and has a market cap of $241.28 million and an enterprise value of $289.25 million. In this presentation, we first explain what Houston Wire and Cable actually does. We will then provide a brief industry overview discussing who the company's competitors are in the market. We will then review highlights of the company's recent financial performance, and we'll use their financial performance to segue into our forecast for its future financial performance over the next several years, and how we came up with those. We'll then talk about where we believe Houston Wire and Cable is headed in the future. We will conclude with a Ben Graham analysis on the quality of the stock and a brief synopsis of our views on the company as a whole. Houston Wire and Cable distributes electrical and mechanical wire to end users, and there are two ways that this can basically happen. The first way is that the electrical wire and cable manufacturers supply the inventory to Houston Wire and Cable. The end users then call up Houston Wire and Cable, and the end users request specific types of wire and cable that is best suited for their needs. The second way that Houston Wire and Cable can distribute its products is by the end users calling the manufacturers directly. The end users will ask for the wire and cable that is manufactured to their specific needs in terms of length, width, strength, etc. The manufacturer will tell those end users that they don't carry that type of specified inventory, but the manufacturers will then call Houston Wire and Cable to place the order. Houston Wire and Cable will then modify the wire and cable to the end user specifications before shipping it to the end user by the next day. Houston Wire and Cable also has the expertise to figure out what the customer actually is using the products for, and then inform that customer as to the exact products that they need. Now, what are the products that Houston Wire and Cable distributes, and where are all these going? Well, as we mentioned briefly before, Houston Wire and Cable distributes electrical and mechanical wire. With the recent acquisition, the company also distributes mechanical wire ropes and slings. Mechanical cable ropes and slings can be used in anything that requires lifting and pulling. This can be from the cables that operate in elevator shafts, to the lines used by tugboats to pull large vessels, to the cables used in the everyday operations of offshore oil rigs. The electrical wire that Houston Wire and Cable distributes ranges from the speaker wire that you use in your home theater installations to the large electrical utilities that you see depicted here. Because of how these products are utilized, Houston Wire and Cable targets the infrastructure, industrial, and utility markets as end users. These companies will use Houston Wire and Cable's products in construction and everyday operations. Now, in addition to just the physical products Houston Wire and Cable Company offers, it also provides certain value-added services. Among the most important of these are next-day shipping, its cable management program, and over 99% order accuracy. Through its 15 distribution centers, Houston Wire and Cable can reach 95% of the country by the next day. The company also offers a cable management program where companies can essentially use Houston Wire and Cable's warehouses to store their cables until they actually need them, instead of having the cables sitting in spools on the job site, where they're subject to corrosive weather conditions and even theft. Houston Wire and Cable also touts over 99% order accuracy, which is particularly important for jobs that need the wire and cable the very next day. So who are Houston Wire and Cable's competitors? Well, Houston Wire and Cable's major competitors include Allied Wire and Cable, ADI, Calvert Wire and Cable, Distributed Wire and Cable, Priority Wire and Cable, and Silver State Wire and Cable. The company may not always be able to compete on price with the wire and cable manufacturers that sell the products directly. However, it thrives in this industry because of its service offerings, its voluminous inventory, and its national presence. You see, many of Houston Wire and Cable's competitors operate on a much more regional scale, whereas Houston Wire and Cable benefits from the fact that they can operate on a national scale. Now let's look at some of the financial highlights. The stock has been recently trading around $12, which is down 61% from its peak of $30.70 in April of 2007, but has recovered 46% from its low of $4.79 back in March of 2009. And looking at the income statement, you can see that the top line has grown at a 4% compounded annual growth rate over the last 5 years. Margins and profitability have been impacted in recent years from the 2010 acquisition of Southwest Wire Rope and its subsidiary, but the company feels that the integration is now mostly complete after they've consolidated some of their facilities. As a result, earnings more than doubled from the prior year. The company has paid a consistent quarterly dividend since 2007, which is currently at 9 cents a share per quarter. Taking a look at the balance sheet, the company has pretty stable receivables and inventory turnover. They also have a pretty strong current ratio of over 4 times. Since inception, the company has consistently used free cash flow to reduce its outstanding debt under its revolver. The company nearly paid down completely until they had to draw down on the revolver nearly $50 million for the 2010 acquisition. Our valuation of the company. Our valuation for Houston Wire and Cable is a 12-month target price of $17, approximately $3.50 above its current trading price. In order to get there, we use two different pricing models, the PE method and the dividend discount model. With the PE method, we generated historical PE values for the company over the past 4 quarters, then used our projected earnings per share over the next year to estimate stock price. We generated high, low, and average values, arriving at a final value of just under $18. Using the dividend discount model, we used a 2-stage dividend model and assumed a terminal dividend growth rate of 3% and a discount rate of 9%, which is basically just the company's weighted average cost of capital. With this, we were able to arrive at a target price of just over $16. Now, overall, how did we get to some of these forecasts? In order to get to our projected earnings, we needed to analyze pertinent macroeconomic trends and key revenue drivers for the company. 3 macroeconomic drivers that have a large impact on our valuation model are unemployment rates, inflation rates, and population growth. Our model first indicates that company revenues will increase as unemployment falls. We believe that unemployment will steadily fall at a rate similar to the Federal Reserve's employment increase projections. Next, inflation, or rather CPI, is slated to fluctuate somewhere between 2 and 3% over the next year. By keeping inflation constant at 226 basis points, we were able to average out the predicting fluctuations that can have an effect on both supplier and customer pricing. Third, population growth leads to more activity for the company, since more people will lead to an expansion of capacity in target industries. By putting population growth into our model, we were able to forecast potential increases in demand. In addition to economic factors, 3 more specific drivers stand out as key factors in predicting revenue. The first is, if capacity utilization increases, then industries are more likely to demand Houston Wire and Cable's products. Historically, industry capacity utilization grows at a rather slow rate, and we predicted this slow growth to continue as the economy continues to recover. Second, oil rig activity in the Gulf of Mexico will significantly affect revenues since the company provides these rigs with the wire and cable needed to operate. Many experts believe that offshore oil rig activity will steadily increase to between 40 and 50 rigs in the Gulf as floating rigs start to be more common than the current jack-up rigs. Finally, copper prices have the greatest effect on the costs associated with Houston Wire and Cable's products. As copper prices increase, the cost of the products purchased also increase. We predict the price of copper to settle around $4 per pound despite periodic fluctuations, and that any modest future increases will also be felt by the industry as a whole, suppliers and customers alike. Now on to our Ben Graham analysis. Ben Graham was an economist and investor who is considered the father of value investing. While teaching at Columbia Business School, he developed a framework for identifying stocks that might be undervalued or might have significant growth potential. This framework comes in the form of 8 hurdles, 5 of which identify undervalued stocks and 2 of which identify stocks with growth potential. When applying his criteria to Houston Wire and Cable, we can see here that Houston Wire and Cable passes the first 3 hurdles, which are value hurdles. The first hurdle is earnings to price yield of greater than 2 times the 10-year U.S. Treasury yield. It passes this test with an EP yield of 8.16%. The second hurdle is a PE ratio down to 1/2 of the stock's highest in the past 5 years. It passes this with a current PE ratio of 12.2. The third is a dividend yield of half the yield on the 10-year Treasury, and Houston Wire and Cable passes this test with a dividend yield of 2.63%. Now, the remaining value hurdles 4 through 6, we can see that Houston Wire and Cable passes 2 of these 3 hurdles. The fourth hurdle is a stock price less than 1.5 times the book value. 1.5 times book value per share is $4.91. So Houston Wire and Cable fails this test. The fifth hurdle, though, is total debt less than book value, which Houston Wire and Cable usually passes. The final value hurdle is a current ratio of 2 or more. Houston Wire and Cable passes this with a current ratio of 4.3. Now onto the growth hurdles. Hurdles 7 and 8 are growth hurdles. Houston Wire and Cable has not shown an earnings growth of 7% over the past 5 years, and they have not shown a stability in growth of earnings. Therefore, Houston Wire and Cable unfortunately fails both of these growth hurdles. This figure illustrates the attractiveness of a stock based on how many of Ben Graham's hurdles a stock surpasses. By passing 5 of 8 hurdles, you can see that Houston Wire and Cable would be considered an attractive investment according to Ben Graham analysis. As Houston Wire and Cable moves forward, several factors will have a positive impact on Houston Wire and Cable in the near and mid-term. Houston Wire and Cable has successfully completed the integration of Southwest Wire and Rope, and the company continues to look to grow through acquisitions. However, it remains cautious towards these acquisitions, right? And it wants to avoid overpaying for acquisitions or even venturing outside of its area of expertise. As the company improves, Houston Wire and Cable's customers will start ramping up their capital expenditure projects that were slowed during the recession. This will also increase Houston Wire and Cable's revenues. Additionally, the company should see increased sales from construction projects aimed at refitting plants to comply with new environmental standards. Houston Wire and Cable will also benefit from the successful integration of its new management software, which will help it maintain its operational and logistical expertise. Finally, the boom in oil sands and shale exploration requires equipment that Houston Wire and Cable's customers use. Increased drilling activity, thus, will provide an additional source of revenues. At the end of the day, we're bullish on Houston Wire and Cable, and we have rated it as market outperform. And that concludes our analysis of Houston Wire and Cable Company. Thank you for your
Burkenroad reports are produced solely as a part of an educational program of Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and you should not and may not rely on them in making any investment decisions. You should consult an investment professional and/or conduct your own primary research regarding any potential future